Good afternoon. The market is closed. The Dow is closed at another record high. What was it contributed to? It was contributed to the following: the jobs report, the unemployment report today. We have broke a little bit higher right up here, and we're through that major top that we have always talked about. But here's the thing: the bull will have some worries. And the worry is that on this monthly chart, is that we are going to hit a point where we're going to get at least a 5 to 8% pullback at some point in the next couple of weeks. It will start so that once we do get that pullback, people are going to want to buy those dips. The people that have been on the sideline that have not participated, and we're at record highs. Let's take a look. We told people up here that on this S&P 500, if it hits 1567, you'll have that is where that correction would start to play. And those numbers are at 1567. Once again, on this particular monthly reading, I will tell you that we are going to hit an extreme and we're going to get a nice size pullback over the next couple of weeks. Why? 1567 is that magical number that I'm telling you is where a lot of profit taking is going to take place. If we hit that upper end, that's only 16 handles higher, but that's where that comes into play on the S&P 500 now. And we're overbought, and there will be a pullback. And as we go through the month of April, the bull is strong. The bull will pull back. It will bounce. However, the bull has to work this overbought level off to create new buying opportunities for the people who know what they're doing. I would also like to point out the weekly close right here and now. And let's just talk a little bit about the NASDAQ has kind of, on a monthly level, it has lagged the S&P and the Dow readings. It still has a little room to go higher, as it will before it will have its pullback. It's lagged the move. The other one that I would like to talk about is the NASDAQ 100. It has lagged partly due to Apple. But once again, it has room to run higher through here because it hasn't reached a monthly peak of extreme yet. The highlights of the NASDAQ 100 and the NASDAQ Composite, here's the NASDAQ Composite again, is that they've lagged a little bit. They finally broke through these multi-year monthly tops as it has brought to right here. And basically, we're right over here now. We're right here in this monthly level in year 2000 when we were in the bubble is that we've come up to that level. And that's very significant for this new bull run. We'll be talking a little bit more how this could go right up into the peak of resistance before having its 5 to 8% pullback starting within the next couple of weeks and moving through April. Now, there is a lot of money on the sideline that would love to be in that has not participated. There's a lot of day traders in the day trading community who have been washed out of the markets. It's time that you get back in. It's time to get some trading capital from us. It's time to get some good training on a market maker level. And it's time for you to come back and get back. And don't stay on the sideline. Just because you don't have $100,000 doesn't mean that we can't put that up for you. If you meet the requirement, we'll be willing to be happily to do so. One of the things that we can tell you is when you go to trading, you go to open an account. If you're tired of the pattern day trading rule, and you people know what that is, for you people that are undervalued, $25,000 accounts or less, you also know that your order execution system on these online retail applications are not routing orders the correct way. What I would like to show people is that these order executions in these retail platforms are not direct access to the market. So for the smaller trader, if you want the buying power and you want the market maker entry and exits and you want to participate, you want to be involved in this bull rally, then it's here for you. And we have lots of programs to pull you back in. And there isn't anything more than we would like to see is you return to the marketplace and get the training in high frequency trading models and market maker models and how the day trading models are totally outdated, and there is a new way to do business in the markets. And you can go to trading, you can go to the home page, you can click on SMF Stock Exchange, you can click on SMF Options Exchange. We own our own exchange. Yeah, there's lots of exchanges out there, but we own our own wholesale entries and exits, and we have different pricing models than the regular market maker models. We have our own market maker model that competes and steals those bids and sells them back higher. That's exactly what we do.